Hello and welcome to Crux Investor. We caught up earlier today with John McConnell, CEO of Victoria Gold, and we talk about share price stacking and also outlook for 2021. If you want our thoughts on any of those topics, the conversation in general today and the company itself, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis. There's also commentary from experts from around the world on a variety of companies and commodities exclusively for the club members. There's training courses to help you with your diligence process to make you a little bit better at spotting those red flags. And also there are summaries of other interviews that we have done to save you some time. And of course, you can join a thriving community of investors sharing their thoughts and ideas with each other in a very civil manner, free from abuse, trolling, or judgment. So do go and join them at cruxinvestor.com/club. I think you'd like it. And of course, we'd appreciate your feedback. So do leave your thoughts below. We get back to absolutely everyone. Give us a like because that would be appreciated. And of course, if you want to see what we talked about today, take a look in the description below. John, how you doing, sir?
Very good. How are you, Matthew?
Not too bad. Long time. August. We spoke at the beginning of August. How have you been?
Yeah, things are going pretty well. COVID's still an issue, and we're in the second wave here in British Columbia and the Yukon, but we're working our way through it.
Good. Good Christmas with the family?
Yeah, I mean, we were in our little family bubble, no grandparents, no aunts and uncles, no cousins, but it worked out fine.
Now, here's one. And you don't have to answer this, but great if you did. Would you like it with the grandparents there or not like it with the grandparents there?
No.
They're not watching. They're not watching. It's
I've had friends say, best Christmas ever, no in-laws, but I know my daughter misses her grandparents, so it would have been better with them.
That's a great answer. Diplomatic. Well, look, good to hear. So, right, we haven't spoken to you since August. A lot has happened since then. We're gonna hit a lot of the topics that we've had questions sent in on. So, appreciate you making the time for us first of all. But before we do that, give me that 1 minute overview of the business, what it is, and then I'll start with that questioning, if I may.
Sure. TSX listed company, symbols VGCX. We're now a producing gold company. Our main asset is Eagle in the Yukon. We've been producing gold for about a year. It's a heap leach operation, so we're still in ramp up and getting in closer to steady state operations, but everything's on track now.
Okay, so there's a few things that I've mentioned. A few things have happened with you've refinanced that $200. We talked about your thoughts on whether you were going to or whether you weren't. We've got Orion has happened, but I think that the big thing that's happened, big thing that's notable to me was last time we spoke, you were at $17, almost on the nail. Now down at just under 13. What's happened?
Yeah, I think a little bit of the shine has come off of all public gold companies. That has a little bit of an impact. But for us, the big thing is we stumbled in Q3 in terms of production, and we missed our guidance.
Why? And, what happened? What was the problem?
Yeah, partly it's related to COVID, partly it's related to ramp up. We found that the ore is more abrasive than we originally anticipated. So that required making some design changes, modifying liners in chutes and that sort of thing. And that was complicated by COVID, because normally you'd bring in specialty contractors to help you with that kind of work. Because of COVID, we couldn't do it. So we had to rely on diagnosing issues via Zoom. So you can imagine that's and to take the laptop into a crushing plant and try to show the guy on the other end where the problem is and try and work out a solution. Very difficult. So it was those, a combination of things. But the Yukon opened up the border in July, so we started getting those specialty skills on site at the end of July, and now the plant is running properly, and we had a great fourth quarter. So I think we just have to show the market that quarter over quarter things are improving, and we'll get a nice stable operation in 2021, and hopefully the share price goes back to where it was in August.
Okay, so just sticking on that. Okay, so the ore was a little bit more abrasive than you realized. What does that mean, and what was the problem it caused, and have you solved it?
Yeah, so in case of a liner that's in a chute, for example, that lines the chute, we would have anticipated that liner would last, say, 4 months. In actuality, we found out it was wearing out in 2 months. So, you had to replace it more often, caused more downtime. The solution was go with a modify the chute, so that material isn't impacting the liners as directly, and change the material that you use for liners. So go to a harder steel, go to a rubber, in some cases go to a ceramics, all standard, things when you're dealing with ramp up, but very much complicated by COVID.
Right, and how has that affected the bottom line? Is it just a case of it's obviously delayed things in Q3, and that you've missed guidance as a result? But that's not an expensive process. It would just cost you time. Is that what you're saying to me?
Yeah, no, it's time, and there's obviously a direct correlation to the number of tons you put on the leach pad to the amount of gold you produce. So we produced about 10,000 less ounces than anticipated in Q4, or not Q4, in second half overall.
Right. And to the question, which was, do you think you've completely solved the problem? Are you there yet?
I would say we're at about 80% there to solving these problems. Certainly the first half of 2021 will continue to make changes in the plant and fine-tune things, but the worst is behind us. And if you look at our Q4 numbers, we were back on track. As a matter of fact, we had a great December. We stacked over 1 million tons on the pad. So, things are going well.
Fantastic. Well, actually, talk to me about that. You stacked over 1 million tons, which is great. Talk to me about how you manage that process, because, Q1, it's a little bit nippy at where you are, makes life a little bit difficult. And it makes things difficult when it comes to the, leach kinetics, how things flow through the stack, right? So how do you manage that? Do you have to try and get everything done in 9 months and get your 12 months done in 9 months? Or are you able to work somehow through the kind of Q1, the cold quarter? How do you manage things?
No, you're exactly right. As per the feasibility study, the experience of Kinross at Fort Knox in Alaska, we won't be stacking on the pad for the 3 coldest months of the year. So in our case, January, February, March. And that's just being conservative. What you don't want to do is freeze a layer in the leach pad, because then you won't get the solution penetrating through it. So we're going to be careful. We've got 1 winter under our belt now, and we're partway through a second. And we think we can start reducing that non-stacking period and eventually get to year-round stacking. But we're going to be very careful. So, we stopped stacking in early January, and we probably won't resume stacking until later in March when the weather warms up. So yes, that certainly has an impact. We continue to mine primary crush and stockpile material, and we continue to put solution on the pad and leach gold. But because we're not putting fresh ore on, the production of gold will drop off over the next couple months, and then it'll pick back up in April, May.
Okay, so and bear with me because I just think so. People find this interesting when they kind of get into this detail. So usually you've got a metallurgist who's sort of tinkering around the edges, and it can take a while. It can take a year or two to kind of really perfect that, hone it, so you get the sort of maximum recovery possible. I mean, where do you think you're at? Do you think you understand the ore at the moment, the metallurgy at the moment?
Well, I think we'll probably totally understand it 10 years after the mine has been shut down. But, the other thing about heap leaches is, we probably have, somewhere in the order of 75,000 to 100,000 ounces of gold in inventory in the leach pad right now. And, 20 years from now, we'll stop stacking on the pad and we'll leach gold for probably 5 to 10 years after. So, it really doesn't, you don't know exactly what you've got until years after the leach pad has been shut down.
Appreciate that.
The fortunate thing is we get about 80% of the gold in the first 50 or 60 days. So, that's... as we get more material on the pad, we'll get closer to steady state gold production. So we expect, and again, those metallurgists that tinker with the numbers, expect we'll achieve, pretty much steady state operations sometime in the third or fourth quarter of this year.
Right.
And that'll start to take some of the seasonality out of the production. But, if we don't stack, even if it's just for a month, you'll always see some seasonality.
For sure. And I'm just wondering, as the CEO, as the board, what are the decisions you make around issuing guidance based on that? Because you've kind of got 3 months where you're slightly out of control, right? You've got to make your planning and implementation in the other 9 months. So how do you adjust what you tell the market as a result?
Yeah, that's very difficult and a good question. We had a board meeting yesterday, and that was a topic of discussion. And, some board members feel we shouldn't be providing guidance until we've got some more experience with the leach pad. Others feel we have to provide guidance because, the market expects it. So, we'll put out some guidance here in the next 6 to 8 weeks, but, we're going to be very careful. And, I've been paying close attention to people's results in the fourth quarter, and I think everybody has learned a lesson from Agnico Eagle. They all underestimate in their guidance so that they can come out with numbers that are better than guidance. And, it's unfortunate of that, but that's what the market forces you to do.
Right. So, obviously you had a bit of a problem with that yourself last year in the sense that you kind of late starting off, right? Yeah, I think you said you were in I can't remember the phrase you used, but you're saying basically you kicked things off in July, right? Which suggests that anything before that was sort of, you weren't in a sort of economically ready state to actually start putting numbers out there, right? So it was a kind of tough start, COVID, then impact Q3. And then Q4, you've kind of got back to where you think you need to be. And you're saying to me, that should give us some indication of where you think things could be in 2021 on a steady state.
Correct.
Okay. Okay, fine. Thanks for that. I just know it's interesting to understand how you guys are coming at the stacking there. Let's talk finance, right? Orion. So you made an announcement about the book deal with Orion. I mean, tell me about it.
Well, it was a secondary financing by Orion. We had to put in a lot of work, but we never benefited a cent from it. Actually, it cost us legal fees to help them with it. They sold down their position, which we were encouraging. They were at 46, now they're at 36. And, we had always suspected we weren't being included in some of the index funds or ETFs because we had this large shareholder at, close to 50%. It turned out that was true. We're now in the ETF as of December. And I think that's because, we have Orion down around 36% as a shareholder.
So you're on the GDXA, which is great. I mean, certainly in terms of liquidity. As I say, shares are down from when we last spoke. How do you think the market perceived Orion selling down, whatever it is, 11 odd percent? Do you think they saw it negatively, or do you think other factors are at play?
Oh, I think, I think the share price drop for Victoria is primarily related to missing guidance. And, I don't think anyone should think Orion selling down is a negative because they're not happy with the operations. This has been a very successful investment. They were loaned us the money to build the mine. They participated in equity financing to support building the mine. And essentially they've been paid back in full, yet they're still a 36% owner. So, in a sense, they're playing with house money now.
Right. Okay. So people shouldn't look at that as a negative. You say that was actually something a decision you arrived at together, and it's benefited you because now you think indices
I wouldn't say together. I wouldn't say we arrived at it together. They're an autonomous organization and they're in the business, different business than we are. I would say we encouraged it because we'd like to see them down even further. Nobody likes a big gorilla shareholder. But I would think if you talk to Orion, they would say they're still a very happy shareholder of Victoria.
Okay. Let's carry on with the finance discussion. So the $200 million credit facility to refinance out the project debt. We talked about it last time, and you were umming and ahhing because you're like, well, it could cost us as much as $1 million just to kind of put all the paperwork in place and legal fees, etc. So you're trying to work out whether you should or you shouldn't. You've done it. Why? What was the upside?
Yeah, much lower interest rates, we're now primary lenders are not private equity firms, so it's 2 Canadian banks and a French bank. But the key is in 2021, it saves us more than $10 million Canadian.
Right. Okay.
So, even though it cost us, more than $1 million in legal fees and banker fees and that sort of thing, it's well worth it. So
that's $10 million in 2021. How much does it save you overall? Or was that the number?
Well, it's always difficult to say because you don't know exactly what the interest rates are going to be. And how quick, you don't know what the gold price is going to be, but, that certainly affects our ability to repay it. But, There's roughly 75 million in rope that will pay down this year, depending on gold price. So as you said, it was 2 facilities, and one was 100 million, and the other we drew down to 75 million, and we've already made a $20 million payment on the revolver.
Okay, so there's some kind of like variable interest payment. Price of gold is that involved in how they calculate your debt repayments, or are you just saying because of that will determine how much you make and therefore how much you can pay down in any one year or quarter?
Yeah, the latter.
Okay. So it wasn't too complicated. Fairly vanilla.
Interest rate's not tied to the gold price at all.
Fairly vanilla. Okay, fine. Appreciate that. So let's talk about what you're going to do this year. We talked about Q1 in terms of its, the difficulties around Q1 and production. You cracked 80% of the abrasive ore element. You've got the money in place and you're refinanced. In fact, you're better off as a result. So that's all good. The market cap's not too sharp. You're around $800 million ish. I appreciate that it's down, but people are going to be expecting a growth story from you. Are you going to be able to deliver that this year in Q3, Q4?
In terms of growth, in terms of acquiring more things, or growth in terms of increasing gold production?
Well, I suspect initially your current shareholders want you to increase gold production, cash, and drive that share price. That'll be a starter.
Yeah, I think, we're still focused on getting Eagle optimized. We think, we'll get to year-round stacking. That alone adds 40 to 50,000 ounces per year to our annual production. We think there's some opportunities on the mining and leach pad to increase throughput through the crusher, and then that in turn increases production. But a lot of those modifications won't get done till later in the year, so they won't affect 2021, but they certainly will have an impact on future years. So we think there's opportunity to go from 200,000 ounces per year over the next 3 years to maybe as high as 275,000 ounces per year, just through tweaking operations.
So you're always straight with me, John, and I think you always say it like it is, right? So tell me this: do you think 2021 is a year of tweaking things in the operations to get yourself to a point where you understand how to operate this site, how to process it, and how to maximize the recovery rates? And then we should really be looking towards 2022 as the year that things start moving.
Yeah, I think 2022 will be a really good year. Again, it depends on gold price, but certainly from the operations point of view, everything will be bedded down by then. We're still learning about the leaching operation this year. We've also got a few, sustaining capital items we have to do this year. We postponed from last year building a truck shop, for example, because of COVID. So that's coming into the budget this year. We're to a point where, we have to build a water treatment plant. So that was always known. We didn't need it right at the beginning, but it was known we'd have to put it in place in 2021. So this is a fairly high sustaining capital year for us. And then that falls right off for the next 5 years going forward.
Well, okay. Well, there's another topic you've hit on is if you're going to make this an attractive takeout target, okay, you're going to need to extend the life of mine. So can you talk to me about what you're doing on that front? What's happening with the drill bit? Are you exploring elsewhere? Are you sticking close to what you know? I mean, how are you approaching it?
Yeah, two things. The current plan for the open pit takes it down to, just over 300 meters over the life of mine. Now, we've drilled, I think, 6 holes down to 600 meters, and we know the mineralization continues. So, at current gold price, the pit, it would probably make sense to have a deeper pit. So we are going to drill off the ore body at depth. So, from below 300 meters down to plus 600 meters. For 2 reasons. Some of that ore may be ore now, and it may make more sense to, increase our stripping ratio right now so that we can go deeper. And then the other thing is, as you said, from, making the company an attractive takeover target, we'd like to get, credit for those ounces in the future. So that's Eagle. But then we also have a very large land package, over 550 square kilometers. And it's only the last 3 years we've started to step out from Eagle and look at the regional potential. We've now done airborne geophysics across the entire land package. And where we had anomalies, we've done ground geophysics and ground geochem. And we've, found, I think it's roughly 14 high priority exploration targets. Right now, we're focused on an area out to the east called Nugget. It's another large granodiorite intrusive with very similar characteristics to the intrusive that hosts Eagle. And as a matter of fact, in 2019, we made a new discovery out there, which we've called Raven, which is on the southeast corner of that granodiorite intrusive. Very interesting, early days, but we see multi-gram intercepts there over large areas. Now, we did have a small program last summer that, again, was impacted by COVID. We never got into the field until mid-July. But we're planning a roughly $10 million program for this year. We've got 2 camps out there. We've got 3 drills. So we'll be back out there in early April. And most of that $10 million is focused on drilling Raven.
Okay. And we should expect to see sort of steady flow of assay results from that, should we?
Yeah. I mean, all the Canadian producers have experienced delays in lab times this year. Again, related to COVID, government paid people to stay at home. So the labs had a hard time gearing up this year. But hopefully those problems are behind us, and the labs will be right up to speed in 2021.
Okay, well, I'm glad you're not forgetting the exploration component, because as you say, you get a big pile of land there. There's some blue sky. You want to capture some of that value if you do get to the point where you flip this or someone comes along and acquires you. So I think that's the last question from me is, do you think the market understands what your production numbers are going to look like for Q1? And you've done enough work to say, look, here's where we come from. There's the process we're going through. Q1's always going to be tough. And, we are planning for that each year. And we will reach a point where we can be 12-month a year stacking, but we're not there yet. Do you think, or is it going to come as a surprise to them? And how would you say you've handled that conversation in the market?
Yeah, I'm concerned it's going to come as a surprise. Certainly the 5 analysts that cover us understand it. So hopefully they'll help us get the message out to investors and shareholders. And I'll continue to do interviews like this and try and get that message across to people. Okay.
So people, you'd say, you look past the first quarter. We understand what the issues are. We're resolving them, and we know what we're doing. Look out further as to the size of the prize. That's the first thing you'd say, is it?
Yes.
Okay, just checking. And that with the expiration information assay results, when they do start to come through, that could also give some of the kind of blue sky component to this story, but which perhaps it hasn't paid much attention to of recent times. Okay.
Exactly. Yeah.
John, appreciate your time today. As ever, lovely to talk to you. And I love the candor. Want to see what you do this year. Should be, could be a good year for you if everything kind of falls into place.
Yeah, I think we're set up for a good year this year, and this has been a timely interview.